the very elusive BRRRR in short-term rental investing. So with short-term rental investing, it can be a little more difficult to find those value add properties than it is in long-term rental investing. In vacation markets, most of the properties that are in these markets are either second homes or they are already investment properties. So you don't run into as much distress as you do in metro markets where people are living in the properties, they run into financial trouble, and then they let the financial trouble get all the way to their door, and then they have to sell the property at a discount. In true vacation markets, which is where I choose to invest, you don't really run into that because people will tend to, when they get in financial trouble, unload those second homes or those investment properties at retail value before the financial trouble gets all the way to their door. A little fewer and further between than long-term rental investing, but it is doable. I've done it myself, and I'm going to show you how. Traditionally, BRRRR deals have been found by casting a really wide net of lowball offers across a lot of properties. So making 75% or lower of asking price offers on 20 to 30 properties. That strategy doesn't work so much anymore in 2021 because the real estate market is just so competitive. The way the market is now, you don't get deals by casting that wide net of lowball offers and seeing who bites. You get deals by having a better strategy than the other investors in the market and also being willing to put in more work. Once you've made the decision that you are willing to work harder and think more outside the box than all the other investors in your market, there are 5 key things to look for to find a rehab property in today's hot short-term rental market. Tip number 1, look for the days on market. Look for properties that have been on the market for a long period of time. Buyers have been conditioned in the past year, I would say, to think that there is something wrong with a property if it's been on the market for more than 2 or 3 days. So properties that have been on market for a few weeks or even potentially a few months are really great places to look for deals. Those can really be the diamonds in the rough. The next thing to look for when you're looking for a potential rehab property in a vacation rental market are ugly kitchens, bathrooms, and flooring. So remember, we talked about you have to be willing to put in more work than the other investors in the market. There is nothing that will stop a new investor who's not willing to put in the work faster than a kitchen that needs to be redone. Kitchens and bathrooms are technically the most expensive items in a home to redo. So a lot of new investors that are too, nervous to get their hands dirty, they're going to stop and not move forward with, not even really give a second look to a listing that has a really dated kitchen and really dated bathroom. So that can be a really good opportunity for you as an investor who is willing to put in the work and add value to a property. The third item to look for in terms of being able to add value to a short-term rental is, are there areas in the property that could be converted to an extra bedroom? Areas like offices, second living areas, things like that. Or do you have one really, really huge bedroom that you could split into 2? More bedrooms equals more value and also higher income on the rental side. So if you can find a property that has some wasted space that you can turn into an extra bedroom, that's a really great way to add some value. The fourth thing to look for is the property unfurnished? In vacation rental markets, it is really common for properties to come furnished. And with new investors and investors who just don't want to get their hands dirty, they're not going to want to put in the time and expense of furnishing a property, whether it's a money thing, which guys, you don't have to pay cash to furnish a property. You can use credit cards, private money loans, even small business loans to furnish a new short-term rental property. So don't let the money side stop you. This is a situation where you have to be willing to put in more work than the other investors in the market. And a lot of them just aren't going to want to bother with furnishing a property. So an unfurnished property presents a really good opportunity for you as an investor who is looking to rehab and add value. The last thing to look for is there room for you to add a pool? This doesn't matter at all in long-term rental investing, but it is a key factor in short-term rental investing. While you don't need to have a pool to rent really well, an in-ground pool can add between $30,000 and $75,000 in annual income compared to a comparable property without a pool. If you have the ability to add a pool, there's going to be a lot more cash coming into your pocket each year that you own the short-term rental. Now we'll get to an example. I'm going to walk you guys through a property that I bought and rehabbed last year in Destin, Florida. And while I will admit I did not check all of the BRRRR boxes in that I didn't pay cash for the property and I actually didn't refinance the property after I was finished working on it, I left the equity there because I didn't need the cash at the time. Had I refinanced, I would have been able to pull all of my money back out, and I'm going to show you exactly how I did it. Here's my property in Destin, Florida. It's a 4-bedroom, 3.5 bath with an in-ground pool, and I used all 5 of my tips in order to acquire this property. 1, it was on the market for just over 200 days, which is an eternity in this real estate market. 2, it badly needed a kitchen and bathroom updates. It was very, very late 90s, early 2000s. The granite color was the color of dog throw up. It was just ugly. So a lot of people passed it by for that reason. It is a really, really big property. It's just under 4,000 square feet. So I have the ability to convert one of the really large bedrooms into 2, although I did not do that on this property. 4, it was unfurnished. A lot of investors just didn't want to deal with the rehab and buying furniture. So that worked to my advantage as well. And then number 5, it does have a pool, but the listing agent did not add any photos to the MLS of the pool. Many, many people scroll through the photos before they ever read the description of the property. So I know that this property got passed over by dozens of investors because they only looked at the pictures and didn't realize that there was a pool. That property was listed for $689,000. We were able to purchase the property for $655,000. After we rehabbed the kitchen, bathrooms, flooring, paint, and a little bit of landscaping, as well as furnishings, we spent $75,000. So that puts us at a total of $206,000 cash into the deal. The ARV 6 months after we finished, 6 months after we closed, was $950,000. Although we didn't refinance at the time, we didn't pull that equity out because we did not need the cash at the time. Now, a year after that, the property is worth $1.5 million, and it grosses us about $170,000 a year. That's it for my rehab story, guys. And let us know what you think about that in the comments. We want to hear about your rehab stories. Hit us up and buy short-term rental, long-term wealth at www.biggerpockets.strbook. Thanks, guys.